So there is no doubt that Tesla is one of the craziest stocks out there. It experienced massive growth last year and surged from $85 to almost $900. But as 2021 began, Tesla stock's direction reversed, which ended in a 35% drop. And the opinions are split, reflected in price targets from around $150 to some as high as $3,000. In today's video, we're going to take a deeper look at Tesla stock and break down exactly what we think the future will look like based on the analysis at the end. But before we start, just make sure to hit that subscribe button down below. If you never want to miss opportunities like this, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so at 23.5 times revenue, Tesla is arguably the most expensive automobile stock in the world, considering that the average stock in the sector only trades for 2.71 times revenue. However, the company has everything it needs to back up its stock price. During the first quarter of 2021, the company delivered 184,800 cars, which is up from 88,400 in the first quarter of 2020. Management is also proud of the company's ability to maximize the range, recharge time, and acceleration time of its electric vehicles while minimizing cost. Last year, revenue was up 46% annually to $10.74 billion, and gross margins expanded by 4.37 percentage points to 25.6%. Meanwhile, Tesla's free cash flow improved by 84% over 2019 to $1.87 billion. The especially good news is that the company can keep up these results. It is currently developing or constructing additional 6 factories, while its existing production capacity amounts to 1.05 million cars per year. The main problem with Tesla is that its stock is pretty expensive. Right now, there is a lot of excitement for electric cars, along with ample government incentives for cash buyers. However, even the slightest mismatch between vehicle deliveries and production, say, in the midst of a recession, could cause the company's stock to tank big time. A quick look at hedge funds, however, shows the bullish average on Tesla stock. So the stock was in 68 hedge funds portfolios at the end of the fourth quarter of 2020. The all-time high for this statistic was previously 67. This means the bullish number of hedge fund positions in this stock currently sits at its all-time high. And with companies such as ARK Invest that push out their extremely bullish price targets on the stock, the hype stays among investors. So ARK expects Tesla's market capitalization to reach as high as $4 trillion in the best-case scenario, according to their most recent research note. And although they already had a very high price target of $1,400 adjusted for its 5-for-1 stock split from last year, they then raised that price tag to $3,000 in 2025 based on the updated research. To arrive at this forecast, ARK used a Monte Carlo model with 34 inputs, the high and low forecasts incorporating 40,000 possible simulations. ARK Invest also increased the probability of the electric car maker achieving fully autonomous driving within 5 years and said the company's net autonomous ride-hail revenue could be as much as $327 billion by 2025. It expects Tesla's electric vehicle revenue to reach between $234 billion and $367 billion by 2025, also justifying the extremely bullish new price target. And as a result of those new estimates, Tesla's stock was actually able to close in the green again after multiple weeks of sell-off. Okay, to sum it all up, there still is a huge upside potential on the company's stock. Nevertheless, there of course also is a big amount of risk involved if you buy now, so it would make sense to wait for the stock to confirm the new uptrend. If this happens, we of course also will publish a video to keep you updated. Alright, with that being it for today's video, however, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.